Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 15th of August. I'm Daniel Lam, your host for the podcast. From recent conversations with both internal colleagues and external clients, we sense that sentiment has been somewhat shaky at this moment in time. Regarding China, the conversations would invariably be surrounding the recent weak data and issues with the property sector. And for the US, key topics would be the weakening price action in Nasdaq 100, the Fed still signaling potential rate hikes, and so forth. It's not been easy to spot a major risky asset that have been doing strongly over the last 6 weeks, with one notable exception, which is crude oil. Now, crude oil prices continued their rise last week as escalating tensions in the Black Sea raised the risk of supply disruptions. Saudi Arabia's extended voluntary output cut is another possible factor. This likely helped investors shrug off concerns following weak China economic data and the surprise rise in US oil inventories earlier this month. However, technical charts for WTI crude oil point to overextended and overbought conditions. Now, keen listeners to this podcast would recall how we've been looking at the relative strength indicator, i.e. the RSI, and compare that against the price level of the underlying. Now here, we see that the 9-day RSI has been drifting down somewhat from 72 to 65, while crude oil price actually has been rising from below US $80 per barrel to US $82. So this means the power of the rise in crude oil has been diminishing slightly, but the price has been making recent highs, and that is a technical sign for a potential correction. So we're expecting oil to drift lower to around $79 per barrel over the next 3 months. Let's look at the performance of risky assets related to oil prices. The Canadian dollar has been well supported on a trade-weighted basis, consistent with the rebound in oil prices. We believe dollar CAD is overbought due to US dollar safe haven flows earlier last week. We're expecting a technical correction in the pair towards the near-term support at 1.3320. As for US energy sector equities, they have outperformed on higher oil prices. We remain underweight the sector given relatively weak earnings. Investors could use the recent rally to reduce exposure to the sector. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.